So if something falls through, your BPO shows a value lower than you thought, or you don't like the payment history that they gave you, something about the deal you don't like, just say, I'm out.
Welcome back to the show, everybody. Today we've got a special guest. We're going to talk about mortgage notes and investing in mortgage notes, that is. So I've got Calvin Ewing. He's an experienced real estate investor, just started doing investing in notes over the last few years. I want to pick his brain today. So Calvin, thank you for coming on the show today.
Hey, Joe, thanks for having me on. I'm really excited to be here. Appreciate it.
Yeah, it's going to be good. And I've got a lot of questions here. I wrote them down. So I'm
Sure.
going to pepper you with some good ones, but I think this is what our viewers are going to hear and hear from you. So can you explain your experience in the mortgage note industry and then how your track record so far?
Yeah, absolutely. So I'm actually a Canadian. I live in Calgary, but I've been
Okay.
investing in US real estate since 2009, since I was in college. And so the majority of my investing career, probably about a decade, has been residential real estate,
Mhm.
wholesaling houses remotely, doing some fix and flips, some rental properties. And as I was doing those strategies from up here, I relied a lot on good teams of people and a lot of online tools. There's so many tools out there now that you can really invest from anywhere. There's just public data available, and as long as you got people on the ground that can help you out, you can really do it from anywhere. So I was really working really hard, wholesaling houses, flipping houses, getting paid, one time per deal.
Mhm.
And I just realized that, if I were to want to ever stop this, the money would not come in anymore. And I was kind of building myself into the center of a job. And I was trying to escape a job by getting into real estate originally. So I realized that really my goal was more passive investing. And eventually I wanted to have time freedom and be able to travel and do the things I want to do and still have a business working around me and cash flow coming in around me so
Sure.
that I could free my life up. And so I wanted to pivot. I was really exhausted from working hard doing those types of strategies. And so I got more involved in strategies like owner financing and buying houses subject to the seller's mortgage, taking over their mortgage payments, and then owner financing the house to a buyer borrower who has maybe poor credit, can't quite qualify for a mortgage right away. So we would finance the property to them and become the bank. And I liked that because I was really getting sick of, tenants and toilets and some of the landlording issues, especially when all of my rentals were in another country.
Right.
And I really like the idea of just being the bank and collecting mortgage payments every month. And we hired a loan servicing company to handle the books and, take care of late fees and all of that. And I love that hands-off aspect of it. It was really refreshing to just, once I got the deal done, to just kind of sit back and be like, okay, now I'm collecting my monthly payments and this is way less stress.
Mhm.
And so the one problem with those strategies is when you're buying a house to owner finance, you still have to find the house. So you still have to do a lot of marketing, direct mail, negotiating with sellers, and all of the headaches and drama. I mean, a lot of homeowners, if they're distressed homeowners, they're going through a lot of things in their life, whether it's a divorce or a recent death or something. So there is a lot of, I don't know, I guess the word baggage or drama that
Sure.
sometimes you have to deal with sellers as you're negotiating, trying to close a deal. And that could be a lot of work and drains your energy. And so I like the idea of being the bank, but I still have to find the house. And that's where I started looking more into just reaching out to asset managers at banks and just buying the mortgage note and just becoming the bank that way instead of buying the house first and doing all the extra work involved. And so I started working with a couple mentors, following what they did, and even paying for some courses and classes and just kind of learning the ropes on how you actually buy notes from banks. And I transferred over from buying the house first, and then I now just buy the mortgage, and it's
Okay.
great.
So are you just cold calling banks and say, hey, I want to buy your mortgages?
We do some cold calling, yeah. I do a lot of marketing on LinkedIn as well.
Okay.
Every day I'm reaching out to asset managers on LinkedIn and just sending them a message, just seeing if they have any notes that they're selling at the moment. And sometimes we get lucky and they have something right away, or they'll have an entire tape or pool of notes they're selling off. And sometimes there's nothing for a few months, and then finally they have some inventory that they're wanting to sell. So we just keep that a marketing campaign going. And then I also buy off note selling platforms. There's platforms out there like PaperStack. So I'm constantly looking on those online note selling platforms as well. and just building my network.
Okay.
Hmm.
About how many deals are you doing in a month?
Right now, we're only doing about 3 deals a month. I'm hoping to ramp that up. That's one of the reasons I'm wanting to get out and into podcast world more, is just building
Right.
connections, getting in front of
Well, that
more
seems like
people.
a lot, though, isn't it? I mean, it's well, what's the average size of the loan that you're buying right now?
So we're below 200,000 is kind of my
Okay.
sweet spot. So like anywhere probably above 30,000 and up to about 200,000.
Okay. And
Yeah.
you're focused on in the United States?
All in the United States. Yeah.
Okay.
Yeah.
Um, so you've been doing it now for 2 years. How's your track
Mhm.
record so far? You've hit a home run every time, or have you had some snags?
So with buying notes, I haven't had any snags. The
Okay.
biggest challenge has just been getting that snowball going, getting that momentum going down the hill and speeding up. So, and that's just about building a network of both asset managers and then private money. So I also work with private investors to fund note deals when I don't have my own funds available. And so it's like any business, right? It's getting that momentum going and then it starts to speed up and grow. And that's kind of where I'm at now. So
Sure.
my biggest hangups have more been just not having the funds. So maybe getting an offer accepted, but actually not having the funds available, or just, at first trying to find notes was difficult.
I can imagine. Then
Yeah.
are you finding that, I guess let's go through. So you find your
Yeah.
property. Now, what
Mhm.
strategies do you utilize to really evaluate the potential profitability, risk, the risk tolerance, what you have? How do you do that? What do you look
Okay.
at?
Yeah. So in at least the residential note space, there's kind of three sort of exit strategies or strategies that one would use. So one is buying performing notes. So these are mortgages where the borrower is paying, they have a great track record and great history, they're paying on time, and those are called performing mortgages.
Okay.
And typically banks and note holders, they're going to want to sell those at top dollar because they have a great track record. So when you're buying those notes, you've got a performance, it's going to be paying right away. And so typically on those notes, you're going to be paying, you're lucky if you can buy them at 70 cents on the dollar. Usually you're more at 80, 85, even up to 90. Sometimes people want par for them.
Sure.
So that hasn't really been my space. I have bought some performing notes, but my main focus has been on non-performing notes. And so these are mortgages where the borrowers aren't paying. And I like to break these down when I'm looking at a tape. They call them a tape, but it's basically a list of notes that a note holder or asset manager is selling. And
Sure.
I like to break them into two groups. So the one group is the non-performing mortgages where the borrower hasn't been paying for over a year, and so I've seen it, a year to 10 years,
Yeah.
and there's been no payments. And those ones are more of a situation where if you were to buy those mortgages, you're going to take over the problem and all the headaches, and then you're going to foreclose on that borrower. And your goal is to take the property back as an REO or just sell it at the foreclosure auction. So that's one strategy. I don't really chase that strategy very much because now you're just buying properties. And now we got the big remote problem for me again. I don't like buying
Yeah.
in markets I don't really know. But my main strategy is looking for non-performing notes where the borrowers have stopped paying more recently, within about a year, maybe two, where they're showing signs that they're trying to get back on track. So one of the things you want to look for when you're buying a note is the payment history. And the note seller should be able to provide you with the history, the track record, the notes and everything, the servicing notes to show when the borrower has paid. Have they been trying to pay sporadically? Maybe, 1 month they'll pay double and then there's 2 months of nothing and then they'll try again, they'll make another payment, just showing like they're trying to keep their house and make an effort. Or has there just been nothing, like radio silence
Yeah.
for numerous months? And I'm looking for the folks that are showing signs that they're trying to stay in, they're showing some heart and they just need help. And then what we can do is buy that note and work with the borrower, because maybe the bank's just not willing to work with them, or they're too big and they don't have
Well,
the
they got
time
too
and
many right
resources.
now. Yeah.
Yeah. So we want to look at them and talk to them and just see, like, what is your issue? Like, what's your problem? We just had COVID, right? So a lot of people were maybe laid off or not working and fell behind, and they're trying to get back now that they're working full time. But now they've got, 12 months of behind payments that they're trying to deal with. And so if we can buy that note and work with them and get them performing again, we can modify that loan and maybe put the arrearages back at the back end of the note. maybe we can just wipe it clean and get them just going again. There's lots of ways you can work with them to rehab the borrower and get it performing again.
So how do you conduct that due diligence before you actually buy the note? I mean, you have to buy it and they're only a few months behind. Are you allowed to call the owner before you buy the note? I'm sure you're not, right?
Typically not, no.
Yeah. So how do you conduct that due diligence? It's kind of poke and hope, or
So a couple ways.
okay.
So most, like if you have a note, this is a good tip for any real estate investors that have notes that have done owner financing or something. You really want to keep great servicing notes, whether you're self-servicing the mortgage yourself or you have a servicing company, but you want to have great notes of all the communication you've had with the borrower. You want to keep track of all the payments and late payments and everything, so that you can, when you're selling that note, you can provide that to the note buyer. And so that's what we ask for, is detailed servicing notes, so we can see exactly what's gone on with emails and letters that have gone out and all the communications between the either the servicing company or the bank itself and the borrower. So that's what we rely on to kind of get a story for what's going on.
Sure.
And we can gauge a lot there.
I would be nervous. I would be the nosy one and see what their name is and end up seeing where they work. And
I do that too.
I'm sure you do. Are they still there?
I just bought one. Well, I'm in the process of closing on one in Ohio, and I found out that he's an accountant and trying to figure out what the last time he made any money, and looking at his ratings on his website and that kind of thing. So we definitely do some online searches as well, and we look at the original information that was collected when they originated the mortgage as well. So, if they filled out an application, that kind of thing, what was their credit score, all of those, all the files and information that they have, we want to get a copy of that and look at it. So that's the borrower side. And then there's the property side, which is a little bit more straightforward, like you would if you're buying any property. So,
sure. So now it's easier. Is it the system you were talking about, you're buying the notes from? I don't remember what the name of it was, but are you finding it's easier to buy through them or through the banks? I can't imagine getting into a bank. It's got to be difficult, isn't it?
Well, it's actually not, because a lot of people that are buying notes out there, they just go on those platforms. And I don't know if you want to call it lazy, or they just don't know what to do, but a lot of people just rely on the note selling platforms. And so those platforms can be competitive.
Okay.
But there's a lot of people out there that aren't taking the time to reach out to banks directly.
Right.
And so, we reach out to them, and I talk to asset managers. They might have a really small list of potential note buyers that they send their lists out to, or their tapes out to, and they'll send it to you and you can throw in an offer, and it's great. So it's all about just growing. There's so many lenders and banks out there that it's just growing that network over time and marketing to them consistently. And there's lots out there.
Okay. Now, I used to do auctions, and we did a lot of foreclosures. So we always had to call the REO department, or OREO, depending on real estate owned, or I don't remember what OREO was. It was 100 years ago. I didn't have gray hair back then. But that's the department we had to call on. Is that who you're calling on, the REO division, or?
So we are calling on there's a couple different job descriptions that I use both on LinkedIn and when I'm calling. So the secondary marketing department, if you just type in secondary marketing on LinkedIn, special assets is another name. Another one I look for is whole loan traders. Sometimes the lock desk, you can find the right people there. And chief credit officer. So those are the main job titles I search in when I'm reaching out on LinkedIn. And those will usually put you in the right direction on who to talk to at a bank. Yeah.
I want to interject here for a second. If anybody watching this has any questions for Calvin, put it in the comments. He'll go on the YouTube channel and he'll answer them there. So make sure you don't hesitate to reach out to him. The non-performing notes, what's the longest you've gone? What's the oldest longest time frames that nobody's paid that you've decided it was okay to invest in?
I'm really looking for under a year.
Oh, okay.
I might
3 months is what I was going to guess.
Yeah, it depends again on what they're doing. So a lot of times it'll show you their list, the tape of notes that they are selling. It'll say if it's vacant or not. So if there's someone living in the property and they are showing that they've made a couple payments, that's a good one. If it's been more than a year and it's still occupied, I might consider it. If it's vacant and no one's been paying for over a year, that's the chances of getting them paying again. They're not even living in the house, right? So
Yeah.
that's probably one where you're going to take over and just foreclose.
Are you
And
seeing more of that right now?
like I said, I've only been doing this for a couple of years, so I don't really have a
Yeah.
lot to compare to in
Yeah,
that
I was
case.
wondering if, because so many people were so big into Airbnb and investing. And
Mm.
I had a guy on the show one time and he had 30 Airbnbs. And, I'm all for it, but he was in some areas that I'm like, I asked him on the show, I said, what happens when the economy slows down? Because this was 3 years ago. And he goes, oh, this business will survive. But I mean, he was up in some small towns near a lake. And I'm like, I don't know that that's going to be able to survive. So I got thinking a couple weeks ago. I bet some of those are sitting there, maybe going back, or maybe he's paid cash for them. Who knows? I mean, I hope he's doing okay. But I was wondering if more of those were coming on the market.
Oh, I wouldn't be surprised if they start.
Yeah,
It might be a lag phase.
yeah,
I mostly look for properties that are in major markets. I don't like anything rural just because if I did have to take it back, how are we going to get people out there?
yeah,
So I'm more looking for small centers, small cities or large cities for
yeah. You really have to
buying.
do your due diligence. You've got to really take a look at the real estate, and where you're not driving by these before you see them either, are you?
I'm not personally driving by, but we
Yeah.
do have someone that would
So you'd
drive
have
by.
boots on the ground. Okay. So somebody
So
is driving by, getting a feeling what the community
yeah,
is like,
yeah.
the
I
property
usually
looks
would
like.
call a real estate agent. We
Okay.
always get a broker price opinion
Okay.
by a local broker in that area. We would hire someone to drive by and just check and see what they think of the neighborhood and the house itself. So I want to get someone's eyes on the property and photos and
Yeah.
video if possible. Yeah.
Yeah, I would think so.
Mhm.
What's the lag time from the time you see on the side or you're talking to the bank? What's the lag time before you own that note?
A month or two. The
Okay.
awesome thing that I was really surprised about when I got started, because I'm used to buying houses, is you don't have to have a deposit up front. There's no earnest money, there's no deposit. So you basically make an offer and then you've got a period of due diligence, but you don't have to put any money up front. And so if something falls through, your BPO shows a value lower than you thought, or you don't like the payment history that they gave you, something about the deal you don't like, just say I'm out. It's really that's how it is. And it was a shock because I was really used to having to figure out how I was going to put all my earnest money down on multiple offers and everything. And it's just such a different industry. And there's a lot more flexibility as far as closing. So I'm buying one right now. We had a closing date and we've changed it 3 times, just kind of verbally.
Yeah.
Um, and it hasn't been a big issue. The lenders and asset managers are willing to work with you and accommodate. It's just so much more relaxed and less stress, I've found.
Okay. Are you
Mhm.
having more luck with the big banks or the more regional banks right now?
More regional banks. Those big banks are hard to get into.
Yeah,
Yeah.
I would think so.
I usually stay away from like your major banks because it's just trying to find the right person when you're calling, it's impossible. So
Yeah.
regional banks. Yeah.
Yeah, I would think it would be very difficult to get in. Do you find that are they? I guess you're doing one at a time. Do they really? Have you ever just thought about going out and doing a portfolio and buying a portfolio of them? And I know when we would buy years ago, my business partner and I, we would buy portfolio of properties. And
Hmm.
so the bank would be like, okay, I'm going to give you here's 8 properties. Uh, 5 of them are not very good. And when I say they weren't very good, they were not good. And then 3 of them would be great properties. Um, do you ever find anybody bundling a portfolio like that?
Yeah, you definitely can. And sometimes you can get better deals, just kind of like you were saying, if you're willing to buy the whole pool or multiple notes in that pool.
Yeah,
A lot of times you can get a steeper discount, or maybe you have to negotiate a little bit and say, I'll buy these 2 duds at
yeah,
whatever price you want if you give me this price on my other ones.
yeah,
So that's definitely an option. I haven't done that mainly because I'm still growing my capital resources to be able to buy an entire pool. And right
sure.
now I work usually either with my own funds or private lenders that, typically we're in the range of 100,000 that per note. So
Okay.
yeah.
All right. So this, your negotiation strategy with the bank, is there much negotiation strategy, or they just kind of dictate, here's your number, can you do it?
That's what I love about it. It's
This
really
is it,
easy.
huh?
There's certain ways you can negotiate a bit once you start getting the due diligence in. You can say, well, this borrower hasn't been paying X, Y, and Z, and we gotta figure out a price that's going to make sense. We need to fade our bid because we may have to foreclose, or here's my BPO, here's what you said the property value was, this is why I'm here. So you can show them your due diligence and fade your bids back, and they may accommodate you. But in general, they have a price in mind, and if it makes sense and you can meet it, that's it. There's no not a
There's
lot
no
of
negotiation.
negotiation.
It's this or it's
Yeah,
it's my
yeah.
way or the highway, huh?
Which in some ways it's bad because maybe there is less flexibility. Whereas if you're dealing with a property seller and you can start figuring out how to solve their problems, right? You might be able to
Right.
get a really great price if you can solve some other problems for them. Whereas this, it's more about just the numbers, right?
Right.
So,
Okay.
yeah, but it's nice. It's less stress.
What's the best deal you've ever done?
Best deal I've ever done, probably in my wholesaling space, buying flooded houses in Houston after Hurricane Harvey.
Oh my
A lot of
God, you are a
areas.
risk taker.
Well, we weren't buying, sorry, we were wholesaling flood houses.
Okay, right. Okay.
Yeah. So I remember because some of the areas that flooded in Hurricane Harvey were never supposed to flood. They weren't even in flood zones. And we're
Right.
talking $1 million homes. And so I was trying to wholesale some of these houses after the flood. It was just hard to find buyers. And one guy approached me a few times wanting me to buy and wholesale his house. And I said, sorry, I'm not going to find a buyer. I've tried and with these other houses, and I couldn't find a buyer with that kind of money. And he's like begging me. And so finally I said, okay, fine. Let's put it under contract for a couple of weeks and see if I can find a buyer. I doubt I can. And sure enough, in like 3 days, I had a buyer. And it wasn't huge, but it was like a $50,000 wholesale deal. And we did, a couple hours work on it.
I was going
So,
to
and I
say,
didn't even
for
want the deal. Yeah.
if you take your hourly rate, that's not too bad.
Yeah.
All right, now since I heard your good one, tell me your bad one. What's the worst deal you ever had to do?
Well,
Gotta be fair, man.
that same storm.
Yeah, oh yeah.
Yeah. So I was just getting going down in Texas, and I was maybe a little too eager to get a deal. This is one of the first deals I ever bought down in Texas. And I'd done all the marketing, sending out direct mail and put out bandit signs. And I finally had someone call on a bandit sign. And we were negotiating, and it wasn't the best deal, but I felt the numbers would work. And so I agreed to the deal. We were going to keep this one and do a remodel on it, fix it and sell it. We got to our open house. We had the remodel completed, and then Hurricane Harvey hit. And on the day of our open house, it took on 4 feet of water. And I did have flood insurance on that property. So we used that money to remodel it again. But during that 6 months it took to get all that taken care of and get it back on the market value of that house dropped like $95,000.
Yeah.
And yeah, so that's the kind of thing
stories.
yeah, it really builds character and stamina and strength and courage trying to figure out how to get out of something like that.
Yeah.
And it hurt. But again, after that, there's so many houses available in Houston for the wholesaling side of the business. So that part was good.
Yeah. Are you still buying notes in Houston?
I will buy notes in Texas any day because they have such a
Right.
short foreclosure time.
Yeah.
You foreclose in just a couple months there. So yeah.
Is there any states you want to invest in?
Yeah, New York and New Jersey. It's
Okay.
foreclosing in those two states is really difficult. It takes a really long time. I'm looking for states where you can foreclose in under a year. Anything over that, I'm not really interested in.
Yeah. Well, it's just like investing in, it's investing in real estate. You've got to do your due diligence. You've got to, you did it right by getting that mentor or two mentors, I guess you said. Very powerful stuff is to sit there and learn on them. So how did you find them? How did you find your mentors?
I have had mentors since day one, and I think
Okay.
I probably always will. Yeah, I was actually speaking about wholesaling to another group of people, and another guest that was on the same program as me. His name was Scott Carson, and he's in Texas actually. And so I saw his presentation just because I was on the same docket teaching the same group of people. And that I was like, this is what I've been looking for, because I've already been owner financing and I need someone like this that understands it. And so I reached out to him and started talking, and yeah, he's been teaching me a lot, and he's been doing that for 20 years. So
Yeah.
I think mentorship is, no matter what level you're at, having a mentorship just for growth is key, and just having someone to rely on if something goes sideways you're not expecting. So
Yeah, there's a lot less sleepless nights, right? Because you can pick up the phone and
yeah.
ask the questions. Hey, this is the situation I'm in. Can you give me some advice here? Very, very good stuff.
Yeah.
Just like this whole interview. Calvin, thank you very much for coming on today. This was great.
You betcha, Joe. It's been fun.
Yeah, it's been. We'll have to get you back on again soon.
I'd love to.
And again, everybody, if you want to have questions for Calvin, don't hesitate. Go in the comments, post them in there. I'll put his contact information in there as well. And for all of you watching, if you could, please give us a like. And if you haven't done so, make sure you subscribe.